The real estate market is shifting, and the smart money knows exactly where to go. While average buyers are still scratching their heads, wondering if now's the right time, institutional investors are quietly scooping up properties in specific states like they're going out of style. These aren't random picks either. The data shows a clear pattern emerging across America where home values are climbing, inventory is tightening, and rental demand is exploding. From the Sun Belt to unexpected Midwest markets, certain states are experiencing a gold rush that most people are completely missing. The question isn't whether you should pay attention, it's whether you can afford not to. Number 10, Indiana. This state isn't flashy. Nobody's writing songs about moving to Indianapolis for the lifestyle. But here's what's actually happening while everyone's distracted by coastal markets. Home prices in Indiana jumped significantly according to Zillow's data, with the typical home value climbing past $235,000. Investors aren't stupid. They see what's happening in cities like Indianapolis and Fort Wayne. The rental market is tight, vacancy rates are dropping, and unlike markets where you need $500,000 just to get your foot in the door, Indiana properties still cash flow from day one. Redfin reports showed consistent buyer interest in Indiana markets, with homes moving faster than the national average. When properties are selling quicker in Indianapolis than in some California markets, you know something's shifting. Number 9, Alabama. The heart of Dixie is getting interesting and fast. The typical home value sits around $215,000, according to Zillow, making it one of the more accessible markets for investors looking to build portfolios. But accessibility isn't the whole story here. Cities like Huntsville are experiencing actual economic growth. The aerospace and defense sectors are pumping money into the region. Birmingham and Mobile are seeing renewed interest as remote workers discover they can live somewhere affordable. While national inventory remains constrained, Alabama's housing supply is even tighter in key metro areas. Realtor.com data showed inventory levels well below historical averages, creating the exact conditions investors dream about. Limited supply plus growing demand equals upward pressure on both home values and rents. Number 8, Tennessee. The volunteer state has been on investors' radars for years, but the momentum isn't slowing, it's accelerating. Nashville's typical home value pushed past $425,000, while Memphis and Chattanooga offer significantly cheaper entry points, according to Zillow's latest figures. Population growth tells the real story. Tennessee attracted massive inflows of new residents over recent years. These aren't retirees looking for sunshine. They're working-age adults bringing jobs and businesses with them. No state income tax helps seal the deal. The rental market in major Tennessee cities remains incredibly tight. Investors who bought properties even 2 years ago are seeing appreciation that outpaces most national markets. Redfin's data confirmed that homes in Tennessee metros continue selling above list price in many neighborhoods. Number 7, South Carolina. The Palmetto State is having a moment. Charleston's explosive growth gets most of the headlines, but smart investors are looking at the bigger picture. South Carolina's typical home value reached approximately $285,000 statewide, according to Zillow, with massive variation between coastal and inland markets. Greenville and Columbia represent the real opportunity. These cities offer growing job markets, affordable entry points, and rental demand that keeps climbing. The state's business-friendly reputation continues attracting corporate relocations, which means steady employment growth. Realtor.com reported that South Carolina markets saw inventory constraints persist even as some national markets loosened. Properties that hit the market received multiple offers within days, particularly in the Greenville-Spartanburg corridor. Number 6, Georgia. This state means Atlanta to most people, but reducing Georgia's real estate opportunity to one city misses the plot entirely. The typical Georgia home value sits around $330,000 per Zillow, with Atlanta's suburbs and secondary cities offering varying price points. Atlanta's metro area continues absorbing new residents at a staggering pace. The city's position as a corporate hub brings high-paying jobs that support premium rents. Neighborhoods that were sketchy 5 years ago are now hotspots, where investors who bought early are sitting on massive equity gains. Cities like Savannah, Augusta, and Columbus are developing their own momentum independent of Atlanta's influence. These markets offer cheaper acquisition costs while still providing growth potential. Redfin data showed Georgia metros maintaining strong buyer interest even during market slowdowns elsewhere. When recession fears spike and buyers pause, Georgia keeps moving. Number 5, Arizona. The desert is heating up literally and figuratively. Arizona's typical home value climbed to roughly $430,000, according to Zillow, though Phoenix drives that average upward significantly. The state's growth story isn't new, but the investment opportunity keeps evolving. Phoenix became one of America's fastest-growing metros. People and businesses continue flooding into the Valley of the Sun. Remote work made Arizona's lifestyle appealing to California refugees willing to trade beaches for lower costs. The rental market in Phoenix tightened considerably over recent years. Investors who understand the metro's geography know that certain suburbs offer better fundamentals than others. Surprise! Goodyear and Queen Creek emerged as hotspots where home values appreciated rapidly. Realtor.com data confirmed inventory levels in Phoenix remain constrained relative to demand. Tucson provides a different angle with cheaper properties and higher yields. Number 4, North Carolina. The Tar Heel State represents one of the most balanced investment opportunities in America right now. The typical home value statewide reaches approximately $330,000 per Zillow, but the Research Triangle and Charlotte markets command premium pricing. The Triangle creates an economic powerhouse. Technology jobs, healthcare, and education create a diversified employment base that weathers recessions better than single industry towns. Charlotte's banking sector provides similar stability as America's second-largest financial center. What makes North Carolina particularly attractive is the statewide growth. Asheville, Wilmington, Greensboro, all experiencing their own expansion. This geographic diversity allows investors to build portfolios across multiple markets within one state. Redfin reported that North Carolina homes continued selling faster than the national median. Multiple offers remain common in desirable neighborhoods, signaling sustained demand. Number 3, Texas. Everything's bigger in Texas, including the real estate opportunity. The state offers typical home values ranging from around $300,000 statewide to well over $400,000 in Austin per Zillow, creating options for every investment strategy. Austin's explosive growth created millionaires among early investors. The city's transformation from quirky college town to major tech hub drove appreciation that seemed unsustainable until it kept going. Dallas-Fort Worth represents the steady money play. Massive corporate relocations brought tens of thousands of high-paying jobs. The metro's sprawl creates endless submarkets, each with distinct characteristics. Houston offers the highest yields among major Texas metros. San Antonio gets overlooked, but provides military employment stability and lower home prices, meaning better cash flow. No state income tax helps both investors and residents keep more money. Realtor.com data showed Texas markets maintaining robust activity even as national trends softened. Number 2, Florida. The Sunshine State isn't just for retirees anymore. Florida's typical home value surged past $400,000 according to Zillow, though that statewide figure masks enormous variation between markets. Population growth in Florida exceeds almost every other state. The combination of no state income tax, favorable business climate, and year-round sunshine creates magnetic appeal. Remote work accelerated the trend dramatically. The rental market across Florida metros remains exceptionally tight. Vacancy rates in major cities hit historic lows. Investors are competing with each other to acquire properties, knowing that finding quality tenants takes days, not weeks. Short-term rental opportunities in tourist-heavy markets create compelling income potential, though regulatory crackdowns in some municipalities threaten that strategy. Redfin data confirmed Florida's position as one of America's hottest housing markets. Homes continue selling rapidly despite prices that would have seemed insane just years ago. Number 1, Idaho. The gem state came out of nowhere to become America's most interesting housing market for investors. The typical home value in Idaho jumped to approximately $455,000 per Zillow, representing appreciation that left even bullish forecasters shocked. What happened in Idaho wasn't accidental. The state became ground zero for California's exodus. Tech workers who could suddenly work remotely discovered they could sell Bay Area homes for millions, then buy bigger, better properties in Boise for half the price, while pocketing the difference. The rental market couldn't keep up. Inventory levels dropped to almost nothing. Investors who owned properties in Boise watched rents climb month after month as desperate transplants competed for limited housing. Job growth followed the population. Companies opened offices in Boise to access the talent pool relocating there. The economic base diversified beyond agriculture, creating sustainability that earlier boom-bust cycles lacked. Realtor.com showed Idaho metros consistently ranking among the nation's hottest markets. Homes receiving multiple offers above asking price became standard. The frenzy resembled coastal markets during peak bubble periods. But here's what nobody's talking about publicly yet. The same factors that drove Idaho's meteoric rise could reverse just as quickly. If remote work policies tighten or the economy stumbles, those California transplants might reconsider their moves. And when the first wave of sellers emerges, the market dynamics could shift overnight. Smart money is already watching for early warning signs, while most investors remain fixated on the growth story, wondering if they're too late. But late doesn't mean wrong. The investors piling into Idaho today aren't chasing last year's returns. They're betting on 5 years from now. They see population trends that can't reverse overnight and housing shortages that won't fix themselves. Meanwhile, back in those other 9 states, the same patterns are playing out, just at different speeds. Some will explode like Idaho did. Others will grind upward slowly, making patient investors wealthy without the drama. The real question isn't which state tops the list. It's whether you're watching from the sidelines or making moves before the next wave hits and prices jump another 20%, leaving you wondering why you waited when all the signs were already there.